Let's analyze together again Big Bear stock. Read the disclaimer right here in the video description below. Last week we were talking about it, the risk of buying the stock at, after a huge rally. So the first one started back in April, you can clearly see the support level right here, the first trend. The second trend is the one that is more risky, because when you see a breakout right here, it starts to go down like crazy. And this is actually what happened back in February, it's like a huge upside potential, yeah. But after that, when the trend finished, it started to go down and correct big, why it happens. You have to go to net income to understand it. I know why you invest in these stocks, because the potential, the upside potential is huge, but you gotta be patient as well. So when you see the net income, the problem with this one is that it's in negative territory, so the numbers actually were kind of, they were kind of better at this point in 2023, and this is where the accumulation distribution process started. You could clearly see here in the whole year of 2023, 2024, they started to accumulate, shares of this stock, and the price, even you see corrections, big corrections right here. And there is a moment when they start to buy again. The last upturn started because of that, because of this huge accumulation process. The problem with it is that we have accompanying losses still, and that's a dangerous territory, because you, for instance, see that a new earnings, they're released, and we have a net income similar to this, similar to the last two quarters, minus 100 million, minus 60. That's not good, when you see that, it's like the stock starts to correct like huge. So when there are cases that when this doesn't happen, actually it continues to go up, and I'm gonna show you an example of a stock that has successfully, it's a stock from Europe, a supermarket stock actually, and what you see here, and you can clearly see right here the uptrend, sorry. And it didn't back up, it didn't go down, it's like, look at the accumulation process similar to Big Bear, and then the huge upside, the huge rally that happened afterwards. So why it happened in this case? We have to go to net income as well. Remember, guys, stocks are based on fundamentals, and you have to study that. And look at that, the accumulation process is here as well. And in this case, when people started to buy the stock at this particular level between March 2022 till November 2024, the stock, look at the net income, minus 150, minus 100, minus 19. So even though there is this is semi-annual, so when you see 6 months that weren't performing as good, like this one, back in June, minus 93, but still there is an uptrend. There's an uptrend in fundamentals. You see the numbers are improving, and actually there are two financial results with positive territory. We had to see that in Big Bear. So if we go back to the stock and you study the fundamentals, the numbers aren't quite good yet. And this is the problematic thing. Another problem that we have with this stock is the reported earnings, and I don't like it either. We see that reported earnings is always worse than the estimate. And that's a dangerous situation, because if we are expecting the numbers improving, we shouldn't see the reported as worse as the estimate. Actually the contrary. When you see a reported earnings that is better than the estimate, normally that creates a rally, because it's like the investors were expecting something worse and it didn't happen, quite the contrary, and they start to buy because they don't want to miss the trend. In this case, we didn't see it yet. So possible scenarios, in the next earnings, if we have a negative surprise factor, which means worse financial results than the estimate, is gonna continue to go down. And actually the level of $3 is feasible, in that scenario. Even still, without knowing what's gonna happen, it could happen. It could go back to $3 because just the trend, because there's a huge correction right here that happened back in February. It could happen the same. Actually, from what I can see here, it's happening exactly in the same scenario. And look at that. I drew this this scenario of long position, okay, you can get up to $9 and you could get 24%, but you are risking 48%. This is the scenario that is happening right now. You buy the stock right here in the worst possible moment, overbought territory, it starts to correct, and then you're suffering everything. So in terms of risk management, you shouldn't do that. You should wait for a better entry. The better entry right here is between $2, $3 $4. $2 is obviously the most extreme level. We're talking about the level that happened back in November 2024. Maybe we don't see the level. It depends on the financial results. But in the short term, it's correcting and it's going into the direction of $4. And then look at this. We have the upturn, the general upturn that started back in April 2025. So probably it will hit here if this continues, and they start to buy again the stock. If they still believe, that the numbers are gonna improve, the fundamentals. I mean, in that scenario, obviously you buy right here, and I'm actually gonna move this. And the scenario is completely different because you could get, for instance, the very same level, $9, but you're not risking like a huge number. Probably where you're risking like the probable support level is right here, -35. So this is a 3-1, risk-reward ratio. So that's kind of, that's kind of good. You're risking just a third of the possible upturn. And this is feasible, you shouldn't do the contrary. 0.5 risk reward ratio is like, it doesn't make any sense, Obviously, we go to the forecast again, and we're gonna study right here the current scenario that we have from analysts from Wall Street. The average thinks the stock should go down -9% for current levels. The most pessimistic one -45%. The most optimistic one more than 39%. So some different opinions, but the scenario is right here. The forecast of the revenue and the EPS is very clear. In the coming quarters, it's not good. It's not gonna be bad, but it's not gonna be good. So when you buy a stock, you are expecting something better than the current situation, And this is the scenario when you see a stock rallying, and going up again and again and again. And we go to the annual. As I said, in the last video, the best year probably will be 2027. Maybe investors start to pile like huge in mid 2026, but currently the situation is not good. It's gonna be better than the last year, but look at what happened back in 2023. These were like not better numbers, and for me it doesn't make any sense, because if you go to 2023, which is gonna be like the reported earnings is the same, very same of the estimate of 2025. That means that the stock should go, you should be trading around very similar numbers, in comparison to 2023. And in 2023, it was trading at 1.62. So completely overbought in that sense. So probably it's better to wait for a better entry. Buying at this level is very risky, as the same, as here, because those who bought the stock here, they suffer a downtrend of more than 72%. Imagine your position falling 70%. That's a huge risk. I wouldn't do it, at least. And I don't trade these stocks. I prefer like blue chips, ETFs. But this is my opinion, of course, and it could, it could go up. Obviously, during these downtrends there are some bounces, but at the end of the day, if the downturn is clear, it's gonna continue to go down, at least when it finds some buying area. And at this point we are in the middle of nowhere, because the upturn is very clear. There are no levels in between when people started to buy and to continue the upturn. It's just one rally very fast, and when it goes down, it goes fast as well. And actually we go and we see, for instance, the volume profile. We're gonna see the same. I'm actually gonna draw the line right here. We're gonna see the most traded area in the last year, and you can clearly see the most traded area again, interestingly, is $4. So probably here people will start to buy, because they did buy in the past, and they don't want to see their positions going down. It's like, okay, this is the perfect area, I'm gonna buy again, to reinforce my position, to avoid losses. I have, probably they have more capital, and we're talking about big investors. Those are the ones who buy at the bottom areas. They like to buy at the bottom. They like to buy the dips, but not right here at the top. This is very risky. And actually, look at see, there is nobody buying at this area, but also all the buying area is right here. Look at it right here, between $2-3, I would say, $4.39, and this is the buying side. And probably it will happen right here, the upside potential again. So when you buy right here, you are expecting you believe the stock should go back should go back to $9, because you believe the financials will improve as well. And remember, this is just a forecast, but it could happen. And actually, an estimate of -0.06 it's kind of good. We're talking about the reporting earnings of the third quarter 2024 was minus 0.05. We need to see scenarios like this. Small losses are kind of manageable in that sense when you buy a stock, especially if we see that the numbers are going to continue to improve. If it doesn't happen, this is when things get tricky and more risky. So what do you think about this one? Do you think it's a buy for the long term, or do you think it's better just to stay out of this stock for now? So leave your comments below and see you in the next video.